welcome to this special show, What the World Wants. This is a show where we're trying to decode what the world is looking out for in the maiden Modi budget in just a few days from now. I'm Sonia Shenoy, and with me is Anuj Singhal. Well, we have two guests who join us on the show today. Jim O'Neill, former chairman of Goldman Sachs Asset Management, and Tim Dickson of Invesco Perpetual will also join us in a bit. Jim, thank you for joining us. The most important question, how crucial would the budget be, considering that you've been bullish on India since it became clear that Narendra Modi would be Prime Minister?
Yeah, exactly. I think in view of the rally in Indian markets since Modi became Prime Minister has been pretty powerful, to put it mildly. So there's a lot of hope and expectation built in. So it might in the very short term be difficult for Modi to satisfy the excitement about him. That said, I'm pretty sure he has some ambitious goals, and it's going to be a very interesting budget. A lot more interesting than normal Indian budgets, that's for sure.
Okay, then what would be the top 2 or 3 things that you would watch out for in the budget then?
Well, I think there are a number of things that will be interesting. First of all, the whole context of how the budget is presented. What one would hope, or I would hope, it would be with the spirit of his big slogan of minimum government, maximum governance. And the style of how it's presented hopefully will be different than in the past. On that assumption, I would really like to see them trying to be a bit more sophisticated about the whole fiscal framework, so splitting out what is done in terms of fiscal spending on what you would call government investments from what they spend on what economists call government consumption. Because there are clearly big things that the Indian government needs to spend more on: education, infrastructure, and things where they need to be a lot tougher, such as all the subsidies and payments for so many things in the civil service and the broader supported sectors. I don't know whether they'll do that, but that's really important. I would love to see announcements about opening up of various markets to foreign direct investments. And then the thing which I would really get excited about is if he was bold enough to give the central bank truer independence and to pursue a defined inflation target which the government itself could set. Now, what I've just said is a really ambitious list of wants, and I'm sure they won't do all of those things, and maybe not any, but I think that's sort of where Modi is moving towards, and to give India a much more stable, predictable and ambitious framework for policy.
Jim, hi. You know, that's interesting. You said that India needs to open up FDI in a lot of sectors. But is there a lot of money that's waiting on the sidelines that would get invested if FDI is opened up in, say, sectors like defense? Is that the sense you get?
The answer is yes. I think if credible policies were announced about opening up FDI, there would be lots of people from many different parts of the world that would want to invest more in India.
Okay, Jim, I know you believe that India has the potential to grow at 10% or go back to that 9 to 10% growth trajectory. But in the near term, over the next 2 to 3 years, would it be tough for economy to grow out of this 4 to 5% rate?
Well, I think it would be very difficult for India to get near to 10% in the next year or two. But by introducing the right policies today, given India's fantastic demographics, I still think it is certainly possible that India could grow by 10% for the next 20 years. And I certainly think it is quite likely that India could grow more than China in the second half of this decade by more than 7.5%. But that should be relatively easy for India to do, assuming that Modi goes down the path that he's sort of told people in advance and since the election.
Okay, then what would India need to do, Jim, to get the kind of money that, say, China has attracted over the last 10 years?
Well, India needs to do as opposed to talk, and this is one of the reasons why Modi is such an interesting person to become Prime Minister. And again, I make reference to this maximum governance and minimum government. Ever since the whole BRICS story started 13 years ago, a lot of Indian policymakers just sort of assume that it's India's right to become bigger and better. Whereas if you contrasted that with China, where they know they have lots of ongoing policy challenges and significant problems to address, but they don't ignore them, they try to deal with them. India has not done that. Doesn't even really have a very coherent framework for macroeconomic policy, and it's deliberately discouraged opening up of its markets to foreign direct investment. Another huge contrast to China. So for India to be in the same sort of true ballpark as China, it's got to start doing those kind of things that China has done so well the past 15 years or so, if not more.
Well, you know, Indian markets have seen a big rally. It's moved up, what, 20%, more than 20% since the start of the year. The key question is, Jim, has it moved ahead of itself?
We'll know the answer to that after the budget. I don't know if it's getting ahead of itself, because if Modi moves down the path of delivering on these things, and there's others as well. I wrote a paper with an old colleague of mine in 2008 about 10 things India could do to reach its potential, and India has not done any of them. It could still do many of them, and if it did, India's future is a lot more rosy than many people believe. And the markets are starting to price some of that as a possibility. But if they go down that path, I think the Indian market has still got a lot more re-rating to be done.
All right, in that case, Jim, what would be the key sectors and stocks that you'll be watching out for, or stocks that you believe can still make money from current levels?
Well, I can imagine those sectors and others could continue to do well, assuming that smart policies are announced and the budget is credible. As I say, if the market is in the early stages of re-rating India's growth potential over the next 5 years and beyond, it will follow that through by re-rating the whole valuation and earnings stream of the equity market. So I think there are many sectors, including the ones that have already done so well, that could continue to do as well, if not better. Against that, I should say, if it turns out that Modi doesn't really walk the walk himself, and just like many other Indian policymakers just talks the talk, then the market will certainly be disappointed. But I suspect that's not going to be the case.
No, I heard you talk about the RBI governor, Jim, and that's going to be a key issue going forward. How do you balance between growth and inflation? What would be your call on that?
You know, I'm going to answer you indirectly. I think the most important thing to happen, and with the new governor, there's been some movement down this path in a positive direction. The central bank needs to make clear what is its own preferred inflation target, and as I said, I would love to see the government actually set them an inflation target which they would then monitor the RBI's effectiveness of policy on, a bit like many other leading emerging nations having done, whether it be Korea, Brazil, and a number of others. And I think something like that as a conceptual framework, so that 1.2 billion Indian people know what the central bank's doing and can adjust their own expectations and behaviour by that, it would be a really, really good thing to do. Against that background, I guess in the near term, the RBI would probably have to be quite cautious, but they can't control global oil prices, they can't control global food prices. So what they have to focus on is the inflation that is generated domestically, and make sure that there hasn't been this spiral, which of course has escalated in recent years, partly because it's been such a poor policy framework.
Okay. What is the single biggest risk to the Indian markets now? Or would it be something local? Or do you think we could get some global accident that will derail our markets?
Well, obviously, like any other market, it's subject to major external shocks. So if for some reason we wake up the day after the budget and Fed Chairman Janet Yellen has just suddenly said that she wants to raise US interest rates, then that's not going to be a very nice day, whatever goes on with the Indian budget, and every market in the world would fall sharply. Assuming that that is not going to happen, most of what's relevant to the Indian market is going to be dependent on domestic factors. And because so many people are thinking about the sorts of issues we've been discussing, is Modi actually going to be in a position to deliver on the sorts of things that he's suggested in winning the election, and many people domestically having voted him in for, and now many investors starting to hope for in terms of relative performance of investing as well. So it kind of depends on whether he's going to deliver what he's talking about.
All right, Jim, that was a whole lot of expectations that you put forward for us, so thanks a lot for that. We'll take a break on that note, but when we come back, Tim Dickson of Invesco Perpetual will be with us.